2008, a year that changed everything. Banks collapsed, millions lost their homes, jobs, and savings. But what really caused the biggest financial crisis since the Great Depression? Let's break it down. In the early 2000s, the U.S. housing market was booming. It seemed like everyone believed buying a house was the best investment ever. Prices were skyrocketing, and banks were eager to lend money. They made it so easy to get a mortgage that even people with bad credit, no job, or no savings could walk away with a loan. These risky loans were known as subprime loans. It was a recipe for disaster, but at the time, no one seemed to care. Then things took a wild turn. Banks didn't just stop at handing out risky loans. They bundled thousands of these subprime mortgages into packages called mortgage-backed securities. They sold these to investors, claiming they were safe investments. Wall Street was raking in billions, but nobody bothered to ask the crucial question: what happens when homeowners can't pay their mortgages? Fast forward to 2006, and the housing market began to crumble. Prices fell, and suddenly, homeowners owed more than their properties were worth. Defaults skyrocketed, and the domino effect began. Major banks like Lehman Brothers went under, triggering a global panic. Trillions of dollars evaporated overnight, and just like that, the party was over. The fallout was devastating. Unemployment soared, families were evicted from their homes, and small businesses shut down. This wasn't just a Wall Street problem, it was a crisis that hit everyone hard. The pain was real, and the impact was felt across the nation. In response to the chaos, the U.S. government stepped in with a massive bailout, over $700 billion to save the banks and stabilize the economy. Critics labeled it a rescue for the wealthy, while the average American struggled to get back on their feet. The disparity was glaring, and trust in the financial system was shattered. Since then, new regulations have been put in place to prevent another disaster. But the question remains, could it happen again? Some argue that innovations like cryptocurrency and decentralized finance could lead us to a safer future. Others warn that greed has a way of resurfacing, no matter the safeguards in place. The 2008 crash taught us a harsh lesson. When the financial system breaks, it doesn't just affect the rich, it impacts everyone.